In RCC, Nintendo posted 5 consecutive quarters of declining profit. Revenue fell 5%, net income dropped nearly 6%. Analysts wrote articles with titles like "Is Nintendo Finished?" The stock slid. The company's flagship console, the original Switch, was 7 years old and visibly running out of steam, and then Nintendo launched a new console that reviewers called essentially the same device with better specs, and in 9 months nearly doubled its annual revenue.
This is the story of how Nintendo engineered one of the cleanest comebacks in corporate history. But more than that, it's the story of a company that has spent 4 decades winning by refusing to compete.
Nintendo is a 133-year-old company that started out making playing cards in Kyoto. Today it employs about 9,000 people, roughly the size of a mid-sized tech startup, and generates annual revenues approaching $15 billion. For context, Sony's PlayStation division, which competes directly with Nintendo, employs tens of thousands more people. The difference in headcount is not explained by automation. It's explained by strategy.
The Nintendo Switch R launched in June Rukench Arshawu at Susistichu Tendol. It is not a generational leap. It runs at specifications that Sony and Microsoft would have considered entry-level 5 years ago. It doesn't have ray tracing. It doesn't have an AI upscaling chip marketed with a catchy acronym. What it does have is a hinge. You can detach the controllers and play it in your hands on the train. You can dock it and play it on your television.
It is the only major gaming device in the world that is simultaneously a home console and a handheld, and Nintendo has protected that category with a ferocity that borders on the obsessive.
By December Nintendo had sold 70 million Switch units worldwide. In the United States alone, it sold Wuffy Slick 1 Bashi units in March. West. According to Circana, the market research firm that tracks U.S. retail, the Switch D is the second fastest selling gaming hardware in American history, behind only the Game Boy Advance, another Nintendo product.
To understand why this keeps happening, you have to go back to Lungkolotan that year. Sony launched the PlayStation San at Wubei-Yushijutandar. Microsoft launched the Xbox Sembre-Loshitand. Both consoles were competing on the same axis: raw computing power, high-definition graphics, and cinematic game experiences. Nintendo launched the Wii. The Wii had a processor from Nuo Etan. Its graphics were a generation behind, and it came with motion controllers, plastic remotes that you swung like a tennis racket, pointed at the screen like a gun, and tilted like a steering wheel.
The Wii sold backies million units. It outsold the PlayStation San and Xbox Sanbri Lucas combined. Nintendo had not won the console war. It had left the console war, and everyone else had walked into the arena without an opponent.
W. Chan Kim and René Maubergen, the business school professors who coined the term Blue Ocean strategy, use Nintendo as a textbook case. The core idea is that competing head-to-head in an established market is a red ocean, bloody, margin-compressing, exhausting. A blue ocean is a new market space you create yourself, where you set the rules. The Wii created the motion control market, the DS created the dual-screen handheld market, the Switch created the hybrid console handheld market.
Nintendo has found a blue ocean exactly 4 times. It failed once. The Wii U, launched in Nisenyer-tun, the Wii U had a gamepad with a small touchscreen. Nintendo's attempt to compete with the iPad as gaming became more tablet-adjacent. The device was confusing. Was it a tablet? A console? A second screen? Nobody was sure, including Nintendo's marketing department. It sold 10 million units over its lifetime, versus the PS4's Fakshivers Simonialian. The lesson Nintendo took from the Wii U was not tablets are a dead end. It was we lost our perpendicular axis.
We tried to copy someone else's idea instead of inventing our own. The Switch, launched in Tuaserishim, was the correction. Nintendo took the best idea it had, handheld gaming, a market it had owned since Tenchubak Hafrizichu, and fused it with home console gaming. No one else was doing that. 7 years and Pak million units later, it remains the best-selling console Nintendo has ever made.
The Switch Air is not trying to create a new blue ocean, it is deepening the existing one, but the numbers suggest that the existing ocean is still very deep.
Nintendo's full-year forecast for the fiscal year ending March. Narchula Project's net sales of Narchula Project's Melia. Approximately, dirham 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 approximately.
The US market drove a significant share of this. American gamers spent $100 million on Switch new hardware in March new Loc alone, a 102% increase over the same month the prior year.
But Nintendo is not a purely American business. More than 60% of the company's total revenues come from outside Japan. The United States accounts for roughly a third of global revenue. Europe contributes most of the rest. This geographic structure creates an interesting dynamic with Japan's currency.
When the yen weakens, every dollar Nintendo earns in America converts back to more yen when reported on its books. In the 9 months through December, Nitendo's foreign exchange gains contributed 19 billion to Nintendo's operating profit, according to its earnings filings. Nintendo had not sold a single extra unit to generate that 19 billion. It was pure currency arithmetic, the passive benefit of being a Japanese company that earns most of its money in dollars.
Japan's weak yen has been presented correctly as a structural crisis for the country. It makes imports more expensive, squeezes consumers, and erodes purchasing power.
Not everything is working in Nintendo's favor. The tariff situation is genuinely complicated. Nintendo began shifting production from China to Vietnam in century assist specifically to reduce exposure to US-China trade tensions. It was a prudent move. Then in April century assist announced tariffs on Vietnamese goods, initially at %, before negotiating down to %. The Switch had launched at $Juk when Vietnam tariffs were at %. The subsequent rise to %, has materially changed the economics.
As Engadget reported in early Juicy Luke, Nintendo may now be selling the Switch Juicy at a loss in the United States under current tariff rates. Nintendo President Shintaro Furukawa declined to rule out a price increase at the company's most recent earnings call. Analyst Daniel Ahmad of Nikko Partners has projected that a U.S. price hike is likely before the end of Nijusi Luke Tain.
The dilemma is structural. The Subo Sushijuder price point that drove record sales is the same price point that may be losing money on every unit. Raising prices risks stalling the momentum that produced those record numbers. Nintendo is caught between geography and geopolitics.
Here is where the IP empire becomes the backstop. Most people think Nintendo makes gaming consoles. That framing is not wrong, but it is incomplete. Nintendo makes Mario, Zelda, and Pokémon, and then builds hardware to give those characters a home. The console is the delivery mechanism. The IP is the business.
The Pokemon trading card game generated pi hasti 10 senyen billion, roughly 810 ugodra billion in Nintendo's fiscal year, ni sen ni shluk up, sandra 8% year over year, according to CNBC's February ni sen ni shluk coverage of Nintendo's earnings and IP strategy. Mario licensing, Luigi O sets, merchandise, film rights contributed pi hastra 10 ugodra billion. The Super Mario Bros. Movie, released in Nisen Nishluk s'mores more than 10 sandra billion at the global box office. A sequel is in production. Super Nintendo World theme park areas at Universal Studios locations across the United States, Japan, and Singapore attracted 10 million visitors.
This matters because it creates a flaw. During the Wii U years, when Nintendo's hardware business was genuinely struggling, Pokemon kept the brand alive, kept revenue flowing, and gave the company time to design the Switch. The IP is a hedge against any single hardware cycle, even if the Switch knee price hike kills momentum. The Mario brand doesn't get cheaper to license.
The broader gaming industry provides useful context for what Nintendo is doing and what it is not doing. Sony's PlayStation and Microsoft's Xbox are both moving at different speeds towards software subscription models and cloud gaming. Microsoft has made Xbox games available on PlayStation. Sony is expanding PlayStation Plus into a meaningful recurring revenue stream. The logic is sound. Hardware margins are thin, development costs are rising, and subscriptions provide predictable cash flow.
Nintendo is the only one of the three that has not hedged. It has no crude gaming service. It has no meaningful subscription catalog competing with Game Pass or PlayStation Plus. It makes hardware, sells software, and licenses IP. That's the model. It has been the model for such years.
A skeptic would say Nintendo is leaving money on the table and failing to diversify. A strategist would observe that Nintendo has refused to enter the red ocean its competitors are now fighting each other in, and keeps creating audiences those competitors can't reach.
This is the Japan factor. Nintendo is a Japanese company with 9,000 employees that competes against Microsoft and Sony, with their tens of thousands of employees, their crowd infrastructure, their subscription ecosystems, and generates comparable or superior margins. The mechanism is not scale. It is strategic discipline, the repeated, deliberate refusal to compete on terms set by someone else.
The Game Boy in Shinjubai Bashiju was not more powerful than the Sega Game Gear. The DS was not sleeker than the Sony PSP. The Wii was not graphically superior to the PS3. The Switch 2 is not technically superior to the PlayStation Voitane in each case. Nintendo competed on a perpendicular axis. Portability, dual screens, motion control, hybrid play, and built a market that its rivals could not easily enter.
This pattern of lateral innovation, rather than vertical escalation, appears repeatedly in Japan's most successful companies. Keyence doesn't make cheaper sensors, it makes sensors that solve problems no one else is solving. Daikin doesn't make more powerful air conditioners, it makes quieter, more efficient systems for commercial applications. The axis of competition is chosen, not inherited.
Nintendo's consistency on this point borders on philosophy. The company has a phrase, sometimes translated as lateral thinking with withered technology, the practice of combining old, cheap, proven components in genuinely new configurations. The Wii's motion controls used accelerometers that had existed for years. The Switch's hybrid design used a screen and dock concept that was obvious in retrospect. The innovation was not the component, it was the combination, and the question the combination answered.
The next test is already known. Grand Theft Auto Buyai is expected to launch on Switch Nu, a game that could move millions of additional units and validate the platform's mass market reach beyond Nintendo's core audience. If it lands and performs, the Switch news momentum extends. If it delays again, it has already missed multiple windows. Nintendo's software calendar in late November gets thinner.
But the more interesting question is what Nintendo does after the Switch Arten. The pattern says when the blue ocean stops being blue, find a new one. The company has done it 4 times. The Wii U showed what happens when it doesn't. Whatever comes after the Switch Arten, Nintendo will not be competing on Sony's terms, or Microsoft's terms, or anyone else's. It will be competing on its own.